Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Thank you for joining me for Friday Insights. In today's edition, we're going to talk about saving more by giving more and the 4 strategies that we see here at Blanke, Schein Wealth Management that we employ for our clients. We advise different strategies personalized to each individual client here at Blanke, Schein Wealth Management, but actually make the maximum impact, right, for the community at large, those nonprofits and those communities that our clients, all of us here, including myself, we feel passionate about. But let me give you some tips that we've seen based upon our experience right now. Let's get right into it. The top 4 sort of tips and tricks that you might want to consider prior to just writing the check. Let's get right to it. Number 1, if you were to talk about writing a check to all of the nonprofits, and believe me, this is in 2020, one of those years where don't forget about those charities that need extra help. I mean, extra help, because traditionally they don't have the means of going out as they did before, having, let's say, a gala or an in-person event, or even the fundraiser. And so they often, all of these nonprofits and charities get left behind simply because we're always trying to think about ourselves and our families, rightfully so, when you go through sort of a financial turbulent crisis year, upside down pandemic, all that you want to think of, our thought process hasn't been, hopefully until now going forward, in terms of taking care of those in the community at large. And so now you still have time between now and year end to get the maximum benefit as it relates to your taxes, right? You're not giving just for the tax benefit, but there is a real benefit as it relates to donating, and then donating in a smart strategy, a smart tax strategy to your favorite charity or just institution that might need it. So now let's get into sort of the 4 strategies. 1, donate long-term appreciated assets. What do we mean by this? Well, you always know that nonprofits, and if you have a nonprofit that you follow or a charity that you follow, ask them if they will take care of if they will are they open to the strategy in terms of accepting, let's call it stock. Let's say you buy XYZ stock at $1 a share, and you've held it for, let's say, a good long time, 5-10 years or so, and now it's worth $25 a share, right? That's substantial appreciation. Well, before you just go and sell it at $25 a share in your own account, realizing the $24 worth of long-term capital gain that you would have to claim, and you want to donate that stock, or think about donating that stock directly to the charity. Now, keep in mind, most charities, if not all charities, have a brokerage account set up. And what we would do is we would just connect here at Blanke Schein Wealth Management, connect with that charity directly. You direct us as to, hey, Rob, Sherry, Rick Jr., everyone on the team, I want XYZ stock at $25 a share, or whatever the trading day it happens to be trading at. So we can't control that, but we can control the amount of shares and the exact stock that you want. And we can then send it to, it's called DTC, not to get too technical, but there is a way of us electronically sending it to that institution, to their brokerage account. What's the maximum impact there? Well, think about this. You just donated a stock that you bought many moons ago for $1 a share. You donated at $25 a share. The nonprofit receives it at the $25 amount, so they got the $25 gift, if you will, and this $1 or this 1 share of stock. They would liquidate it. They get that cash, that donation. They can go. However, you didn't claim. You get credit for the donation of the $25 stock. However, you didn't have to claim it in terms of the capital gain. You transfer the capital gain for the nonprofit to sell, and remember, it's a nonprofit, so the capital gain disappears. They don't have to claim it on their taxes. There are no taxes on that. So it's a beautiful strategy. If you'd like more detail on it, we do this all the time. I personally just, Jenica and I just donated this last week. We made a contribution and a donation to a local nonprofit, but we did it in stock. And the exact same scenario I just played out for you is what we did. So it's a smart strategy. Again, cash is the last thing you want to donate. It's really good, but there's different ways of going about it. Let's look at it. Bunching your gifts. So this goes in tandem with your tax advisor. So they'll look at your current year of income. They'll also forecast what your income projection is. Let's say you have a taxable event maybe this year versus next year, and you're selling a business, or you have a long capital gain this year. Well, you want to have that conversation now before year end with your CPA and get them on the phone and say, hey, here's the deal. And we're happy to jump on this call with you to strategize, if you will, to use a technical term, right? And here's the thought here. you might want to pull forward next year's gifts into this year's gifting. Let's say you give $10,000 a year to a certain charity. Well, why wouldn't you pull 2021's gift back here and give $20,000 this year? Therefore, that maximum net impact to your taxes, it reduces your overall tax exposure by doing that. And then you skip next year's giving strategy. You let the charity know, would they rather have $20,000 now or $10,000 each year? And trust me, the charity will take the money now. So there's actually a double win right there. And the next one is, so that's bunching your gifts. That's a strategy we can help you with if you want more information. Estate planning is always a good one. Always plan for how you're going to, obviously direct your estate by way of your trust, your will, advanced medical directives, and always have that updated on life events or every 3 years, or when Congress changes the rules and the laws, and they do that every so often. So probably annually, right? But more importantly, within your estate plan, you should have a gifting strategy, both while you're here, but more importantly, when you get your angel wings. If you have any sort of charities that you're going to take care of, schools, nonprofits, so on and so forth. It's always a good time to review that. And finally, the donor advised fund. I also personally have a donor advised fund, a charity. Fidelity Charitable is the #1 out there and the largest charity as it relates to the donor advised fund in the United States. They do it better than ever. It's as minimum as $5,000 to set up the account. But again, here's the deal. You can gift, let's say stock, highly appreciated stock, to your own named donor advised fund. So you can name it, the Rob and Jen Charitable Foundation account, if you will. So you have your own naming rights. You have control of it. You get the taxable gift in the year that you actually donate it to that donor advised fund. And then what's great about that is you have control. So even though you get credit because it's a nonprofit, you're gifting it to the Fidelity Charitable bucket, but you still retain control. And then when, let's say you get a $100 request for, Salvation Army or the Heroes, any of these nonprofits, you can go into your Fidelity account as you can on your phone, on your computer, or even call us and we're happy to send the check once you have the account set up to the institution you care so much about. And so you've gifted highly appreciated long-dated asset securities that have cap gains. You get the immediate tax impact and that benefit in the calendar year you make that gift. It's an irrevocable gift, so you cannot get it back, but that's okay because you're going to give it anyway. And there's always a room to give and there's room to grow too. So we here at Blanke Schein Wealth Management are very well versed in terms of the more you give, the more you save, and vice versa as it relates to taking care of the community that's around you. There's a lot more strategies that we can employ. Just give us a call. We're here for you. And we love, 1, taking care of you and your family, 2, saving you money and obviously growing and making you money, and 3, also taking care of the community you care so much about in the way of the nonprofits and the charities. So again, think about it. Give us a call. We're here for you. And thanks for watching our Friday Insights. Take care.